Hi everyone, in this video let's discuss about SC 720, the auditor's responsibility in relation to other information. Yeah, let's move on. Scope of this essay. It deals with the auditor's responsibility relating to other information, whether financial or non-financial, included in the entity's annual report. Those information which is included in the entity's annual report, what is the auditor's responsibility with respect to that information is covered under this standard. This essay does not apply to this very important point. Preliminary announcement of financial information or securities offering documents including prospectus. The objective of the auditor is to consider whether there is material inconsistency between the other information and the financial statement, to consider whether there is any material inconsistency between the other information and auditor's knowledge obtained in the audit. When auditor identifies material inconsistencies or other information appears to be materially misstated, and to report in accordance with this essay. This is the objective, right? To identify whether there is any material inconsistencies between the annual report and the financial statement, or that is annual report consists of other information, right? Or whether there is any material inconsistency between the auditor's knowledge or auditor's information about which is obtained during the audit and the other information, and to respond appropriately when there is identified material inconsistency and to report the same in this report. So what is other information? Financial or non-financial information and the auditor's report thereon included in an entity's annual report. Everything included in an annual report will be known as other information. Annual report, a document or combination of documents prepared on an annual basis by the management or charged with governance in accordance with law, regulation, or customs. The purpose of which is to provide the owners with information on the entity's operations and the financial risks and financial position as set out in the financial statement. An annual report contains or accompanies the financial statement and the auditor's report thereon, and usually includes information about the entity's developments, its future outlook, and risk and uncertainties, a statement by the entity's governing body, and reports covering governance matters. So, let's discuss what is given in the essay directly, okay, from the bare standard. Now, this essay may also assist the auditor in complying with relevant ethical requirements that require the auditor to avoid being associated with the information that the auditor believes contains a materially false or misleading statement of information furnished negligently, or omits or obscures any information required to be included where such omission or obscurity would be misleading. See, there is an ethical requirement that the auditor should make himself clear that there is no statement which is false. Okay, so he is not going to express an opinion on other information, but he just verifies whether the facts are accurate. Okay, whether it matches, whether it corroborates audit evidence obtained, right? Likewise, whether it corroborates with the financial statement which is being audited by the auditor. Other information may include amounts or other items that are intended to be same as to summarize or to provide a greater detail about the amounts or other items in the financial statements, and other amounts or other items about which the auditor has obtained a knowledge in the audit. Other information may include other matters. Now, this standard does not apply. We have already read it, right? Preliminary announcements of financial information. Just we are going to state that this could be a budgeted figure, like we announced for employees, right? This could be the budgeted profit. Your bonus will be based on this profit. Like that, there could be some preliminary announcement that is not covered under this standard. And also, securities offering documents including prospectus. Chartered accountants will be engaged to oversee the rights issue process, rights issue documentation. So that process will not be covered under this standard. Now, the objective of an auditor having read the other information are to consider whether there is a material inconsistency between the other information and the financial statement, or consider whether there is a material inconsistency between the other information and the auditor's knowledge obtained in the audit. respond appropriately when the auditor identifies that such material inconsistencies appear to exist, or when the auditor otherwise becomes aware that other information appears to be materially misstated, and to report in accordance with this essay. Annual report, just now we have gone over, right? A report which sets out the entity's performance, including the financial performance and the financial position. Now, misstatement of other information. A misstatement of other information exists when the other information is incorrectly stated or otherwise misleading, including because it omits or obscures information necessary for proper understanding of the matter disclosed in other information. Other information could be financial or non-financial information other than the financial statements in the auditor's report thereon, included in the entity's annual report. All information is included in the entity's annual report except those audited, which will be known as other information. Obtaining other information. The auditor shall determine through discussion with the management which documents comprises the annual report and the entity's planned manner and timing of the issuance of such documents. Make appropriate arrangements with the management to obtain in a timely manner and, if possible, prior to the auditor's report, the final version of the documents comprising the annual report. Where some or all of the documents determined in A will not be available until after the date of the auditor's report, request the management to provide a written representation that the final version of the documents will be provided to the auditor when available and prior to the issuance by the entity, such that the auditor can complete the procedure required by the standard. What are things? Let's discuss. Okay. First, the auditor has to determine what will be forming part of other information, what will be the forming part of annual report, when such annual report will be issued, what is the planned timing. Okay, once he becomes aware of it, he should request the management or make appropriate arrangement with the management to obtain the annual report's copy, final version, before he signs the audit report. Okay, so that if there is any changes that to be made, he could include that in audit report. Or else there are circumstances with which the annual report's final version will be, or some part of the annual report's final version will be obtained only after the signing of the audit report. Then the auditor has to obtain a written representation from the management stating that they will surely provide the auditor with the final version before it is published to the general use of the entity. Okay, so that the auditor could proceed with performing the procedures as required in the standard. Reading and considering the other information. The auditor shall read the other information and in doing so shall consider whether there is a material inconsistency between the information and the financial statement. As the basis for this consideration, the auditor shall, to evaluate the consistency, compare selected item or other items and other information with such amounts or items in the financial statement. He should corroborate with the same with the financial statement amount. Consider whether there is a material inconsistency between the other information and the auditor's knowledge obtained in the audit, in the context of the audit evidence obtained, and the conclusion reached in the audit. While reading the other information in accordance with paragraph 14, the auditor shall remain alert for indications that the other information not related to the financial statement or auditor's knowledge in the audit appears to be materially misstated. He should be very aware, and he should exercise professional skepticism. Okay, now responding when a material inconsistency appears to exist or other information appears to be materially misstated. If the auditor identifies that a material inconsistency appears to exist, the auditor shall discuss the matter with the management and, if necessary, perform other procedures to conclude whether a material misstatement of the other information exists, a material misstatement of the financial statement exists, the auditor's understanding of the entity and its environment needs to be updated. These could be three conclusions, right? One, other information is wrong. Okay, what is the financial statement I have given? That is correct. Or other information could be correct. I am had some in obtaining the documents. That's why their financial statement amounts are materially misstated. Or else the control process itself is wrong. That understanding I'm obtaining it now via the other information. The auditor's understanding of the entity and its related control or the environment needs to be updated. So, responding, how to respond when an auditor concludes a material misstatement of the other information exists. When there is a material misstatement of other information, the auditor shall request the management to correct the information. Request management to correct the other information. If the management agrees to make correction, fatafat done, good, right? The auditor shall determine the correction has been made. Or refuses to make correction. That's one there is a need, right? That's when the real challenge comes. Refuses to make correction, the auditor shall communicate the matter with the CWG and request the correction to be made. If the auditor concludes the material misstatement exists in the other information obtained prior to the date of the auditor's report and the other information is not corrected after communicating with the CWG, the auditor shall take appropriate action, including he could consider the implications for the auditor's report and communicating with TCWG about how auditor plans to address the material misstatement in the auditor's report, or else he could withdraw from his engagement when the withdrawal is permissible under the law or regulation. If the auditor concludes a material misstatement exists in other information obtained after the date of auditor's report, so before the date, okay, I could modify my report or I could consider the implications of the report and discuss it with the CWC, okay, or else I could withdraw. If is obtained and I found it to be material misstated after the date of auditor's report, if the other information is corrected, no worries, just perform the additional procedures necessary in circumstances. Okay, if it is not corrected after communicating with TCWG, take appropriate action considering the auditor's legal rights and obligations to seek to have uncorrected statement appropriately brought to the attention of the users for whom the auditor's report is prepared. He should seek a legal opinion to serve the users that this is materially so-and-so information is materially misstated. Responding when a material misstatement in the financial statement exists or the auditor's understanding needs to be updated. When there is a material misstatement in the other information, there are those further two procedures which have to be followed, either it is before or after. Okay, now there is a material misstatement in the financial statement, or my understanding, there is auditor's understanding has to be updated. Then what has to be done? If as a result of the performing the procedures, the auditor concludes that the material misstatement in the financial statement exists or the auditor's understanding needs to be updated, the auditor shall respond appropriately in accordance with the essays. Okay. Reporting. The auditor's report shall include a separate section with the heading other information or other appropriate heading for an audit of the financial statement of a listed entity. The auditor has obtained or expects to obtain the other information, and for audit of unlisted corporate entity, the auditor has obtained some or all of the information. See, for financial, listed entities, then we have to mention that the auditor has obtained or expects to obtain the other information. For unlisted entity, we have to mention the auditor has obtained some or all of the other information. When the auditor's report is required to include other information section in the accordance with the paragraph, this section shall include a statement that the management is responsible for other information, an identification of other information, for an audit of financial statement of a listed entity, the other information, if any, expected to be obtained after the date of the auditor's report. A statement that the auditor's opinion does not cover the other information. Auditor's opinion does not cover the other information. This is again an MCQ. Okay. Even though I'm going to perform some essays on this, but such other information is not covered by the auditor's opinion expressed. A description of the auditor's responsibility relating to reading, considering and reporting on other information. When other information has been obtained, the auditor's report either a statement that the auditor has nothing to report. If the auditor has concluded that there is an uncorrected material misstatement of other information, a statement that describes the uncorrected material misstatement of the other information. Now, when the auditor expresses a qualified or adverse opinion, the auditor shall consider the implications of the matter giving rise to modification for the statement required. Reporting prescribed by law or regulation. If the auditor is required by relevant law or regulation to refer to the other information, the auditor's report using a specific layout or wording, the auditor shall refer to standards on auditing only if the auditor's report includes a minimum identification of other information, description of auditor's responsibility, and explicit statement addressing the outcome of the auditor's work. For this purpose, what are things to be documented? Documentation of procedures and final version of the other information has to be documented. Now, depending on applicable laws and regulations, one or more of the following documents may form part of the auditor's report. One could be management report or management commentary. That is board of directors report. Okay, nothing but board of directors report. He could say these are the so and so achievements during the year. These are the areas where we need improvement. These are our strengths, weakness, opportunities, and threats. SWOT. Right. Then we have the chairman's statement, corporate governance statements and reports, and this could be some examples. Now, examples of reports that when issued as standalone are not typically part of the combination of documents that comprise the annual report, and that therefore are not the other information within the scope. So this is very important. See, what is other information everybody knows, right? What does not form part of other information that you need to know to get better marks. Okay. See, these are not within the scope of SSSC. Separate industry or regulatory reports, CSR reports, diversity and equal opportunity reports, product responsibility reports, labor practices report, human rights report, other regulatory filings with the government agency or register of companies. So this is very important. Okay, let us make it. This is very important to be aware. Now, let's move on. The following characteristics provide the auditor with a frame of reference in determining if a misstatement of other information is material. These are characteristics to check whether a material misstatement is material, like in subjective, right? Material is considered in context of the common information need of the users as a group. Users of the information are expected to be the same as the user of the financial statement. So who was the user of financial statement? Those who have a basic accounting knowledge, who could read and understand the financial statement. Materiality to taken into consideration of specific circumstances of the misstatement, whether the users would be influenced by the effect of the uncorrected misstatement. Judgment about materiality involve both qualitative and quantitative consideration. It also considers about the nature and magnitude of the items of the other information. Now, okay, let's move on. Management of those charged with governance is responsible for preparing the auditor's annual report. See, for financial statement, it is management's responsibility. For other information, it's management responsibility. For comparative information, everything is management responsibility. For annual report, also it's management's responsibility. Communicate with management or those charged with governance. The auditor's expectation in relation to obtaining the final version of the annual report in a timely manner prior to the date of the auditor's report, such that the auditor can complete the procedures required by this essay on a timely manner. Then, the possible implications when other information is obtained after the date of auditor's report. The communications may be particularly appropriate. For example, initial audit engagement or else when there is a change in management, we have to inform, and when other information is expected to be obtained after the date of the auditor's report. Now, obtaining other information in a timely manner prior to the date of the auditor's report enables that any revisions that are found to be necessary to be made to the financial statement, the auditor's report, or the other information prior to the issuance. In addition, the auditor may find it useful to request other representation, other written representation. For example, management has informed auditor all the documents it is expected to issue that may comprise other information. The financial statement and other information obtained by the auditor prior to the date of the auditor's report are consistent with one another, and the other information does not contain any material misstatement with regard to the other information that has been date of the auditor's report. The management intends to prepare and issue such other information and expected timing of such issuance. Now, factors that may be taken into account when determining the appropriate engagement team members to address the requirements. First one will be experience. Okay, whether the engagement team members to be assigned the task have the relevant knowledge, experience, degree of judgment, and in case of group audit, it is necessary to make enquiries of the competent auditor in addressing these similar issues. Okay, see, knowledge, experience, and degree of judgment involved. Okay, now, examples of such amounts or other items may include tables of charts or graphs or disclosures about some items of the financial statements or description of the financial results. Selecting the amounts of the items to compare is a matter of professional judgment. Factors that may be relevant for this judgment include significance of the amount, the quantitative relative size of the amount, sensitivity of the particular amount or other item in the other information. Determining the nature and extent of procedure to address the requirement is a matter of professional judgment. Example of procedures could include I could compare the information, or I could just check whether there are any difference and have the different meanings, obtain a reconciliation between the amounts with other information in the financial statement, comparing the items and checking whether the calculations are proper. Now, evaluate the consistency of the amount. Considering whether a material inconsistency between the other information auditor's knowledge obtained in the audit. Other information may include the amount or items that are related in the auditor's knowledge obtained in the audit. Examples of such amount could be disclosure beyond based on geographical region, a statement the company has introduced product X and Y during the year, summary of locations of the major operation. The auditor's knowledge obtained in the audit includes the auditor's understanding of the entity and its environment, including entity's internal control, which includes such matters. So, auditor's understanding includes the matters of where he has to obtain understanding, the relevant industry regulatory requirements, nature of the entity, selection and application of accounting policies, entity's objectives and strategies, measurement and review of the entity's financial performance, and the entity's internal control. Now, the auditor may determine that referring to or a documentation or making enquiries of relevant members of the engagement team or the relevant component auditors is appropriate as a basis of the auditor's consideration of whether material inconsistency exists. For example, when the other information describes the planned cessation of a major product line, and although the auditor is aware of the planned cessation, the auditor may make enquiries to the relevant engagement team members who perform their, in this area to support the auditor's consideration. See, there is an operation is going to be ceased within a few period of time, within a few months time. Okay, so the auditor has to ask questions to make them sure. Okay, now when other information describes important details of a lawsuit that could be there for a contingent liability or which could have been turned into a provision by now. Okay, so that is also very much necessary. Now, remaining alert for other indications that the other information not related to the financial statement of the auditor's knowledge obtained in the audit appears to be materially misstated, assist the auditor in complying with the relevant ethical requirements that require the auditor to avoid being associated with the other information. That auditor means a material false or misleading statement, a statement furnished negligently or omits or obscures any necessary information is misleading. Remaining alert for other indications that the other information appears to be materially misstated could potentially result in auditor identifying matters such as differences between other information and internal inconsistency in other information that leads to auditor to believe that the information appears to be materially misstated. Okay, see, whenever there is a material inconsistency appears, what the auditor has to do, he should obtain an advice from the legal counsel and he should consider the implications in the auditor's report or withdraw wherever permissible. Okay. Now, when a material misstatement of the other information is uncorrected, appropriate action the auditor may take to seek uncorrected misstatement appropriately brought to the attention of the users of the uh, auditor's report when permitted by law and regulation, include providing a new or amended auditor's report or bringing the misstatement to the attention of the appropriate authority and communicating with the regulator and considering the implications of the engagement continuance. In reading the other information, the auditor may become aware of new information that has implications for auditor's understanding of the entity and its environment, auditor's responsibility to evaluate the effect of the identified misstatement, the auditor's responsibility relating to subsequent events. Now, we have some, wait, let me go. See, let's complete by reading the reporting implications and some examples. Okay, reporting implications. Qualified or adverse auditor's opinion on the financial statement may not have an impact on the statement if the matter in respect of the auditor's opinion has not been modified, is not included or otherwise in the other information, then the matter does not have any part of the other information. See, those doesn't have any part of the other information, that's fine, right? Qualified opinion. In circumstances when the auditor's opinion is qualified, consideration may be given as to whether other information is also materially misstated for the same matter. Whenever I have qualified some matter, I have to check whether such particular matter has been properly disclosed in other information or even that requires some qualification. That requires some disclosure of the fact. Qualified opinion due to limitation of scope. When there is a limitation of scope with respect to a material item in the financial statement, the auditor will not have obtained sufficient appropriate audit evidence about the matter. In this circumstances, the auditor may be unable to conclude whether or not the amount of other information related to this matter results in a material misstatement of the information. Accordingly, the auditor may need to modify the statement required to refer to the auditor's inability to obtain, consider the management's description of the matter. See, I don't know, I have not obtained any evidence which could support that material item. Okay, that's why I'm stating the fact. Case that I was not able to obtain an evidence, and that's why I am not able to give a comment upon this. Adverse opinion. Adverse opinion on the financial statement relating to the specific matter described on the basis of adverse opinion paragraph does not justify the omission of reporting of material and statement of other information that the auditor has identified in the auditor's report in accordance with paragraph 22E. When an adverse opinion has been expressed on the financial statement, the auditor may need to appropriately modify the statement, for example, to indicate the amounts or items in other information is materially misstated. Some items could be materially misstated, right? The same could have been disclosed in other information. So I have to give reference to other information also. Disclaimer of opinion. When an auditor disclaims an opinion on the financial statement, providing further details about the audit, including a section to address other information, may overshadow the disclaimer of opinion on the financial statement as a whole. Accordingly, in those circumstances, the auditor's report does not include a section addressing the reporting requirements under this essay. So, whenever I'm going to give a disclaimer of opinion, I am not going to cover anything about this standard at all. May overshadow. Like there are so many informations, and the users may not understand that I have disclaimed an opinion. Okay, that's why I'm not going to give any opinion or any disclosure with respect to the other information while I'm giving a disclaimer of opinion. So the last part of the day is this one: examples of amount or other items that may be included in other information. Summary of key financial results, selected operating data from a continuing operation or geographical segment or product line, special items such as asset disposition, litigation provision, asset impairment, etc. Liquidity and capital resource information such as cash and cash equivalents, marketable securities, dividends and debts, capital lease and minority interest obligations, capital expenditure by segment or division, amounts involved in unrelated financial effect of off-balance sheet item, amounts involved in guarantees, contractual obligations, legal or environmental claims and other contingencies, financial measures or ratios such as gross margin, return, average capital employed, return on average shareholders equity, current ratio, interest coverage ratio and debt ratio. Some of these may be directly reconcilable from the financial statement. Following part, this is again an exam question. Okay, so this again needs some more attention. Okay, these are the amounts that could be forming part of other information. There are some items could be forming part of other information that are. I am going to give an explanation to the critical accounting estimates, identification and description of related party transactions, articulation of the entity's policies and approach, and then nature of off-balance sheet items, description of guarantees, indemnifications, etc., legal and regulatory requirements, etc., management's qualitative assessments of the impact of the new financial reporting framework, general description of the business environment and outlook, overview of the strategy, description of trends and market prices and commodities, contrast of supply, demand and regulatory requirements, explanation of specific factors influencing the entity's profitability. So, with this, I've covered SA 720. Until now, we have covered both SA 600 series and 700 series. So, if you want some more standards, please do stay tuned and comment the most wanted standard. So, I will do that video for you. And have a great day ahead. Take care. Bye bye. Thank you.